Hello everyone and welcome to the channel. My name is Brent and in today's video we're going to go ahead and cover the M1 Finance 1 week performance from the 16th to the 20th of August 2021. We're going to go ahead and cover the overall performance, the 1 week performance, the dividends that were paid out in the account, what we bought last week, and we're going to go ahead and cover what we are buying this week. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Now jumping over into the M1 Finance portfolio, let's go ahead and kick it off by taking a look at the overall performance. Now, we did actually move up last week a little bit, little tiny bit. We're up 77.43%. This is all money weighted based on how much money we've invested, how much we've received in market gains and earned dividends. This is our current total return. Now we can see that we just slightly moved over the $8,800 mark for the market gains, and we crossed over $2,400 in earned dividends. That is our overall performance of this portfolio since we started this up back on January 8th of 2018. So overall has been doing really well. I just went through here and took a look at my positions because I'm trying to decide on what positions I wanted to buy. So we'll go ahead and cover a few positions that I was taking a look at and why I am buying these few. Now overall, our three top winners are Apple, Lowe's, and Main Street Capital, whereas our top three losers are currently Clorox, Simon Property Group, and Colgate. Now, Clorox, Colgate, Hormel, MERCK, Siggy, Method, IIPR, these are fairly new positions into the portfolio as of this year, 2021. So they're kind of finding their place, and we're kind of building up these positions to a sizable mark within the portfolio. So at the moment, while they're kind of down, either barely breaking even or negative in the portfolio, we're going to go ahead and average into these positions, kind of building it up for the long term. So with that said, let's go ahead and take a look at the 1 week performance. Okay, 1 week wise, we had market gains of $54.91, and we had some earned dividends of $10.41. So that means that sometime throughout this past week, on the 16th to the 20th of August, we sat through an ex-dividend date. If we look at our chart here, so last week from the 16th to the 20th was 3M. So we sat through the ex-dividend for 3M. How much we're expected to get paid? I mean, we can see it kind of here. We're expected to get paid roughly $10.41. This will be an earned dividend that is not yet paid, but will be paid out in the future. Now, looking at our 1 week performance, overall, we are up by 0.17%. Now, we had a bit of a dicey week. We had quite a few positions in the green. Lowe's, for example, spiked up nicely, up 9.29% this past week. Cisco up 3.10. Southern Company, this is a usually mild utility company, up 2.73. And MERCK, we'll go ahead and cover some news on MERCK that I believe we have two things that recently happened with MERCK, which I believe are really positive for this company. One of the reasons I'm going to continue to buy this one up at the moment, and we'll go over a few things that came out with them. Our worst performer this past week, Stanley Black & Decker, down 4.86. Method down 3.85, and Simon Property Group down 3.67. So overall, it was fairly even. We had 50% positive, 50% negative, but the positive outweighed the negative, and that's why we were able to move up by roughly 0.17%. If we compare that to the indexes, again, we have the S&P 500 down 0.59%. We have the Dow Jones down 1.11%. And we have the NASDAQ down 0.73%. So across the board, they were negative. I think last week our portfolio was positive by 2.7%. We beat out the indexes last week. We outperformed the indexes this week. So it's been fairly positive within this portfolio lately. And this has been doing really well. If we pulled up FinViz here, so FinViz, let me go look at my heat map here. This is something I should probably check out. I haven't checked that out yet. So if we take a look at the 1 week performance for the index here, we can see that the FANG stocks, Amazon down 2.85, Tesla down 5.15, Google down 0.22, Facebook down 1.05, Apple down 0.61, whereas Microsoft there up 3.93. So out of the main FANG stocks, Microsoft was the only positive one there, up 3.93. We also saw Netflix there up 6%, so it's pretty positive on Netflix as well. But the majority of the big companies here, the large cap, pulled back the rest of the market there. And you saw the rest of the market really didn't perform really well. Energy down, Exxon down 7.10%, Chevron down 7.51%. So energy got hit really hard. Financials as well. JP Morgan down 3.29. Bank of America down 3.03. Wells Fargo down 5.86. So Wells Fargo definitely got hit pretty hard. We see healthcare actually stood out pretty positive. So medical devices, diagnostics, instruments, healthcare overall seems pretty good. Utilities, we already saw Southern Company did pretty well this past week. And that looks like the majority of the two sectors there, healthcare and utilities. Real estate was pretty mixed. We saw that within my portfolio. Again, the only one that was pretty positive was Digital Realty Trust within the portfolio. So overall, that is the 1 week recap right there of the indexes and other areas of the market. Now let's go ahead and take a look at the activity here. So we went over last Monday over our buys. We purchased some Hormel Foods and Lockheed Martin. So taking a look at how they performed this past week, Hormel Foods for the 1 week. Make sure it's 1 week. Let's go ahead and take a look at the 1 week. Hormel Foods moved up by 0.69%. Lockheed Martin moved down by 0.2%. Again, we talked about Lockheed Martin coming off their highs. They really don't have any sort of bottom in place. So right now, Lockheed Martin looks to be kind of slowing down. It's down 0.2%, whereas again, the rest of the markets were down a little bit heavier. So Lockheed Martin could be finding some sort of a little, some stable ground, but we'll kind of keep eyeing that one into the future weeks. Going back to our activity, we were paid out 3 times this week from companies within our portfolio. We received $12.66 from Avi. We were paid $2.86 from Colgate, and we were paid $2.19 from Hormel Foods. So that is a total there of $19.71 paid out in dividends within last week. So that was all kind of coming into the portfolio, and we made our deposit there on Friday of $201.42, giving us that grand total of $219.13 to invest this week. Now I want to go ahead and hit on MERCK news because this one was positive this past week by 0.62%, but I believe that they'll continue to move higher as of this point going forward, just because recently when I was taking a look at this company, one thing that recently got rolled out over in Canada was this testing for an antiviral therapy treatment that was going to be rolled out and tested in Canada. So this little article right here just came out recently, 8 days ago, and I believe this will be really positive news for MERCK going forward. So they're beginning to do some sort of rollout for this and begin testing. So I think this is pretty positive for MERCK overall going into the remainder of 2021 and 2022. And also, because it's not always about just vaccines here, MERCK recently released news that they placed the spotlight on an oncology treatment and basically said this week the drug maker announced, MERCK, that its lead cancer treatment, Keytruda, was approved by the FDA. So this combination is now the first-line treatment of adult patients with advanced renal cell carcinoma. So pretty interesting news there for MERCK. They're not only working on a antiviral treatment, but also they recently had a other drug got FDA approval. So this is 2 good positive things for MERCK. So despite MERCK currently trading pretty beat up here in the short term, if we look at their stock price, they did shoot up here as of that news. You can see here that they were down around $75, $76. They recently kind of bounced above their 50-day, 200-day moving average at $78. If this news continues to look positive, they continue to look profitable and move to the positive, we could see the stock price continue to pull up. That'll pull that short-term 50-day moving average higher, kind of creating a better opportunity for this one to kind of break out into the 80s and above. So I think we're going to continue to watch MERCK, how it moves in the future. Pfizer, we kind of talked about, potentially taking a bit of profits on this one. I read into a couple articles going over Pfizer. They're going to be releasing boosters in September for treatment going, with what's going on here in the world. But it's all money for Pfizer. So that could continue to carry their revenue, their net income, their earnings higher into the future. So here in the short term, I believe that this is kind of priced too high. But with what's going to be rolling out in September and beyond, this one could pull back slightly, or it could just remain pretty high or a new trend line, and this could be the new bottom for Pfizer moving forward. So let me know down in the comment section below, do you hold Pfizer? Do you plan on continuing to hold, or are you taking profits? Do you think that this will be, their new kind of higher high or higher low? And let me know down in the comment section below. Simon Property Group here, this is one that we kind of looked at as potentially kind of having some weakness, especially with potential closure in the future. I know we just kind of went back to masks here in Oregon. I know a lot of the places that, I took the whole week off, we went to the coast, and a lot of the dining places were no longer dine in. You had to dine out. You just kind of ordered your food, you had to leave. You couldn't really dine into the restaurant there. So that could be something that could be coming into the future as well. So Simon Property Group being a retail real estate investment trust, I may just end up just selling out of this one, taking the loss on this, and just kind of moving the capital elsewhere. There's better opportunity always out there. So I may end up moving that. Let me know down in the comment section below. Does anybody out there hold Simon Property Group or any other retail REIT? What are you doing, or what have you been doing? I am more than likely going to be selling out of this one and just taking those profits, or taking the capital, not profits because we are down, and just kind of rolling it elsewhere. We can make back our losses and continue moving forward into the future, because they did cut their dividend during the initial downtrend in 2020, and they recently reinstated it. But that again can happen again if there's any sort of issues there. Lockheed Martin, we bought a little bit of this one last week. Again, we don't have any sort of bottoming out point in this one. We did have a bit of a slow. So if we look at the, if we look at the 3 month here, we can see that it hit 354 and it bounced. So it touched 354, bounced up to 357 pretty quick. This one really doesn't have any sort of bottoming out though. We can see here that there's really no place where it kind of sat and went for a while sideways. It kind of trended here for a while. So it'll have some resistance at 384 and above, but it doesn't have any sort of support here back until about 330s. So we may see Lockheed Martin continue to fall back into the 330s. But again, we looked over this one's revenue, net income, free cash flow. They also locked in a recent contract. So this one's still moving pretty positive. Everything is moving pretty positive. They put out some good outlook for the future going into the remainder of 2021. So overall, I believe Lockheed Martin, regardless of where it comes down here in the short term, it'll just move up in the future, just because its earnings and its financials are still really, really strong behind this one. And they just got some new contracts under them. Colgate and Hormel Foods, these ones right here, I'm kind of holding out. I bought up Colgate here not too long ago. I know within the portfolio here, if we take a look at the overall performance and take a look at Colgate, we can see it is down 5.45%. It only has $725 in it, and it is a position that I'm kind of bullish on for the long term. It's one of those stable ones. But if I look at their financials here, we can leave their earnings here, and I punch in the revenue, net income, and we look at the last 5 years, and let's go ahead and look at it percentage wise. How has this company done? Colgate, as of 2016, it's definitely grown really nicely. Let's take a look at the 10 years here. Probably a better chart. Yeah, so ignore, they probably had some little tax thing kind of happen here in 2016. But as of that point, they've just been kind of slowly trending higher. Slow growth with the revenue. That's fine. It's a giant company here, so up 3.27% on their revenue, but their net income a nice 10.71, and their earnings has been growing nicely at 30.56 over the past 10 years. So this is a pretty big company, Colgate, but just one of those name brand companies that just kind of continues chugging forward. So no problem buying more Colgate. This one, if we look at our ex-dividend chart, I believe this one goes ex-dividend, or went ex-dividend here recently in July. So it'll come back up within 3 months. So 7 and 3 is 10. So it'll come back up on ex-dividend in October. So we can just kind of buy into these companies while it's down 5%, average down, increase our yield on cost, increase our future dividend income, increase our share count, and kind of bump up our overall position. So not looking bad. Its financials look pretty good overall. Now, Hormel Foods, on the other hand, this one's in a bit of a rocky position right now. We can see its revenue has been growing, but net income and earnings has been steadily decreasing. I believe in our last video, when we had looked at Hormel Foods and its recent earnings report, they had actually reported a loss of sales and are expecting loss of sales of anywhere from 2 to 6% going into the remainder of 2021 and potentially 2022. So here in the short term, within the next half a year, Hormel Foods is actually looking pretty negative. Its share price really hasn't been beaten too much. This one still could come down over the past 5 years. We can see here that we're kind of trending sideways. As of the start of 2020, we had a nice high peak in mid-year 2020, but as of then, it's been kind of trending down. It is now sitting in the support level at, wherever it's currently at right now. Let's take a look. So it's at $46. So really, this could go anywhere. If its earnings, its net income continues to come down as it's looking right now, they've already stated in their earnings that they're expected some loss in their sales percentages. So this one could actually downtrend a little bit further. Currently in the portfolio, it is, what was it, positive or negative? I think it was right there, down 2.78%. So we'll take a look at how this one kind of performs here in the short term. If it's earnings, that's one I'm going to be monitoring for their earnings wise. If their earnings just continue to downtrend, we may end up just kind of cutting that one, but we'll see how this one kind of looks. Midterm, long term, yeah, I would agree with this one. Short term, it could go either way, but midterm, long term are looking kind of negative as far as, earnings wise. So share price could be affected negatively by that as well. So I'm not going to be buying Hormel Foods today. I think that Colgate, Lockheed, Merck all have pretty positive things with them. Pfizer, this one, I believe I could take some profits on and feel pretty confident that the share price will pull back on. And Simon Property Group, this one I've been I've told myself continuously on a weekly basis that I kind of risky about this specific sector, retail and the potential closure and dividend cuts in the future and future losses. So what I'm going to do is, just because I have 3 companies that I'm really interested in, they have good future financials, they're currently in good positions, I believe I'm going to go ahead and pick up more Merck, more Lockheed, and more Colgate, while also selling out of Simon Property Group and cutting down just a little bit of Pfizer, just kind of trimming that position just a tiny bit here in this video. So let's head over to our portfolio. The first thing that we're going to do is sell SPG. We're going to go ahead and select Simon Property Group. So we can see here that we've earned $100 in dividends from this company, but we've lost 184. So we're still down roughly 83.65%. Now we can make this up in another investment. Lockheed Martin could bounce back, and that could be our gain of 12.65%. We could quickly make $83 back in not only capital gains, but also from dividends from Merck bouncing back, from Colgate bouncing back, and Lockheed Martin just kind of bouncing back towards those highs once again. So all 3 of those companies, I don't see any reason for either of them to kind of stay down where they're at the moment. So we're going to go ahead and sell out of our full position. So I'm just going to go ahead and punch in here, sell $900 of Simon Property Group. Now, when you're selling a position on M1 Finance, you can actually sell out of the position higher versus how much you are holding. So we're going to go ahead and hit continue and confirm the sell, and our sell has been completed. Now this is pending sale, so we're actually able to use this capital right now. It's not shown in our cash balance, but when we go to buy, it'll be available of part of what we're able to kind of buy with. Also Pfizer, so let's go ahead and type in PFE. Pfizer here is valued at 1,765. So our profits are roughly $569. So we'll just say 570. So I'm actually just going to go ahead and just sell off the profits there. Just it's within a Roth IRA, so I'm not having to worry about any sort of capital gains taxes. So I'm going to go ahead and just sell off $570 and hit continue and confirm. I'll rebuy Pfizer in the future, but for now, we'll go ahead and remove a little bit, trimming down that position with how high it's currently at $48. If this one kind of falls back into the $40 range, or it could trend lower, that's completely fine. Short term, something could go wrong with their boosters. Their boosters are going to be released in September. There could be some negative news, negative stuff that goes on around that. So that could definitely drag that price down as well. And let's head back over the M1 Finance, go back into our Roth IRA. Now we have 3 positions that we're going to be buying. We're going to be picking up some MERCK, Lockheed Martin, and Colgate. So as of right now, let's go ahead and take a look at MERCK. So when we click on MERCK and we click on buy, we'll see here that are available for order is 1,689. This is because we're going to be completely selling out of Simon Property Group. So that capital is available for order because it's basically taking what we had and making it available. And also we're taking $570 in profits from Pfizer and our current allocation that we deposit of 200 plus our dividend. So that's a total there of roughly 1,690. So because I'm splitting this between 3 companies, I'm just going to go ahead and just split this even between the 3. We're going to go ahead and put $563 into each one of these, but this one would actually push it over 2,000. So we're actually going to be breaking it down a little bit less. So I want my max positions on this to be about 2,000. So I'm actually going to be taking 2,000 minus 535.35, which is $464.65. So we're going to go ahead and punch that in, continue and confirm. So MERCK is one of those positions. So I'm going to go ahead and just leave that at that $2,000 invested, and we're going to be leaving that one as it is. The other one here, Colgate. So Colgate, let's go ahead and take a look at where Colgate's at. Okay, so both of these are fairly below that $2,000 mark. So I will go ahead and take the remainder there that I can invest, which is 1,224. And split that in 2. So I'm going to put $612.24 into Colgate, and I'm going to go ahead and put the $600. Let's go ahead and find Lockheed Martin, LMT, and put in our $612.24 to this one. This will bump up that position to about $1,800 and some change. So that'll be really close to where Lockheed Martin will be basically kind of filled out as a full position in the portfolio. And that is it. So now if we look at our details of what's going to be happening on Monday, we're going to be removing roughly $900 or all of our potential amount out of Simon Property Group. We're going to be taking profits from Pfizer of $570. We're going to be rolling profits and the capital from Simon Property Group plus our deposits over into Lockheed Martin, into Colgate, and we're going to be maxing out our position for MERCK for $464, put in that position to about $2,000 in that company. So those are all of our buys going on at 6:30 a.m. on Monday. So that is going to be it for this video. We went ahead and covered our total M1 Finance performance over the past, 3.5 years. We covered the 1 week performance, our current activity of the week, what dividends we received and stocks that we purchased. We went ahead and covered some news for MERCK. Well, I'm pretty bullish on that one despite where the share price is currently at. That is going to be it for this video. If you guys are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue, and I will see you guys in the next video. Thank you all for tuning in. Bye-bye.